Deven Choksey is joining us in the show this Monday morning. Deven, good morning. Good to have you with us here. Any thoughts on the UPL Advanta deal, Deven?
Well, good morning, Prashant. Of course, I think the deal is, very powerful deal, as I call it, because I think you look at, all sides of activities. On one side, you have the agri-business of UPL and a geographical reach that they have created. The Advanta too similarly has created their own reach. I think coming together, they would have operational synergies, and probably, a very profound operational synergy coming up. That's one important aspect of it. The second aspect is, the consolidated entity would probably have a larger amount of benefits to talk about in form of financial numbers. On one side, the merger would invite, higher amount of
Okay, so you're talking about, you're focusing on synergy, you're talking about synergies, but we had an analyst on who covers UPL. He said, the concern is that UPL promoters in their individual capacity hold 13% in Advanta. Advanta has gone up 4 times in the last 2 years. So, it raises some corporate governance type issues. Right? UPL, the company owns 36.5% and promoters own 13%, a little over 13%. Are you worried about that?
Not really, actually. I would think that the company, if you look at the entire seed business in general, the most of the seed companies have done a smart performance on the stock market front. So singling out, Advanta on that particular count, probably is not a fair assessment, as I would like to call it. On the contrary, I would like to believe the way in which they acquired the Advanta way back in 2010-11 and thereafter build the company and the business, and the kind of potential that the Advanta carries because of the innovative seeds, seed processing activity that they are carrying out. To my mind, they are likely to be eventual winner. Plus creating a geographical bandwidth, across different continents and riding on the back of UPL's net distribution reach is something which is not common available with many of the domestic seed companies. Obviously, the likes of Monsanto and Bayer Crop Science would have that advantage because of the MNC character that they hold. But typically an Indian company creating an MNC setup is something which is unparalleled. So I wouldn't like to get into that particular aspect of assessment, but I do believe that it would create into higher amount of synergy for the UPL and Advanta shareholders ultimately.
Okay, fair enough. You have positive coverage on United Phosphor, UPL, and you own That's shares right. in UPL?
We have coverage. Yes, we own shares in this company. We have coverage on this company as well. And we have active accommodation also going on in this company. That's a disclosure from my side.
Okay. At 1 o'clock there's a conference call. By some estimates, this merger will add about 6% in profits to UPL. But it will lead to about 20% dilution for UPL. So we'll see, I guess, but you're talking about some slightly longer term here in terms of synergies, etc. Any thoughts on Dr. Reddy's and Son, Deven? Again, they've gone through a bit of a sort of up and down. Actually down and up, I should say.
At the same time, I do believe that some of those concerns which are a little overplayed in the market, I would think that they are typical character of a pharma company where they will keep coming and going out of the system. However, what remains in the business is the fundamental strength of the company. They have the ability to crack higher amount of the launches in given time period, and at the same time it is creating better visibility for the company in next 2 years or so. So we remain positive on DRL. Sun is passing through its own challenges of merging the Ranbaxy inside, and as a result of which couple of more quarters could possibly remain as far as the cost absorption is concerned. According to me, that could be the time period by which the company would complete the integration, and reasonably confident that Sun would probably come out winner with the Ranbaxy integration. So overall, positive. However, must say that the pharma companies probably would struggle for a while to get the premium valuation once again back into the market. Largely also due to the investors finding better opportunities elsewhere, and at the same time to create the headroom there has to be a relative amount of attraction at lower level price. So I would think that at lower level price for investors, the opportunities are there in these companies. One could consider them selectively, with the price going down.
Yeah. ITS, in particular, Deven, any thoughts? It's about 15 times a year ahead forward earnings.
Again, the argument holds here that I think fundamentals of the company, they haven't changed. They are remaining same. The headroom was relatively less when the stock price was up. I think that today the headroom is relatively, I think, more, I think, because of the fall in the price. So certainly, I think, given the strength of the company, given the strength of fundamentals, probably I think one would like to buy at lower levels. Remember, I think this kind of momentums are not going to come up in so early time. Till the time we see a large amount of money flowing into the markets, we don't see immediately that particular possibility of large money flowing into the markets. As a result of which, we would like to believe that corrective downside in the market would be a good time for investors to accumulate, I think, likes of Infosys. We strongly feel that I think the kind of business model that they have adopted in form of digital play, as in form of cloud computing, I guess I think Infosys would be relatively safer bet going forward. And with inorganic growth appetite that they have created, to my mind, I think the company remains reasonably strong from investment perspective. So a fall in the price, most welcome to add the stock into the portfolio.
Any other interesting opportunities, Deven, that you've noticed from the last time we spoke emerging?
I would think that I think given the kind of stimulus which the government has given in the last week by way of 1 lakh crore worth of money in the hands of public sector employees, stroke railway employees, I guess I think this money will find I think 3 times multiplier impact eventually, and the consumption levels would increase in some of the select areas. To begin with, I think 2 areas which we would like to I think add into the coverage list also we have, but at the same time I think to consider these 2 areas, one is automobile and second is the housing finance segment, which be I think the area of activity with many of the NBFC stroke some of the select banks. I would think that I think these 2 areas could possibly have the resultant benefit of this money coming in hands of the consumer. Really feel that I think some of the auto companies are good for investment portfolio. The likes of Maruti, likes of Tata Motors, even Bajaj Auto, Mahindra and Mahindra kind of companies, they relatively remains I think favorable play to add into the portfolio. Given the fall in the interest rate, I think again it makes more sense to have such kind of companies in the portfolio from long-term investment point of view. So yes, I think this is one theme which we believe that I think would play out well going forward, given the kind of money that is coming in hands of the consumers.
All right, fair enough. Deven, thank you very much. It's a pleasure speaking with you as always. Quick chat. Appreciate you coming on this Monday morning with that perspective.